team. All right, ladies and gentlemen, welcome back. It is Monday, September 30th, 12:10 out here on the West Coast. That means we're in the middle of power hour out here filming this. That means it's 3:10 out east by Bennett. Bennett, how we doing today?
I'm doing good, Shake. Doing good.
Doing good. I love to hear it. That means we got a month end today. We got quarter end today. We got a lot of chop we're dealing with. Real quick, let me just say, predicate this with like this next. We're at like 35 days to the election, and there's so many implications about the election. About whichever side wins. Honestly, my take on it is the best thing that's going to happen is it's just going to be over. It's just going to be another event that passes, and then market is continuing on. I don't think any of these crazy policies from either side will get passed with the locked House and Senate. So they're doing all the fear tactics out there. But in regards to all that, 35 days to the election, it would make a lot of sense for the market to just chop and just fucking do nothing for the next 4 or 5 weeks until we get the election out of the way. And then my thinking is the election's out of the way, and then we get that second rate cut, and that's when stocks really make their move. So I'm looking at these next few weeks as I'm anticipating a lot of chop. Probably want to do less. Probably want to be very focused and picky with your risk. But that's really it. I just wanted to touch on that before we got into it. So we have the S&P up here. We're chilling right around all-time highs, but it's been very choppy. Thursday, Friday, very choppy. Today, very choppy. No surprises there. We're not seeing a ton of names break out. Very selective trading. You're sitting there tick trading this market, you're probably having yourself an aneurysm. But overall, Qs trading up around this trend line. Overall, everything's good. If you look at a weekly chart here, let me get these out of here. Weekly chart of these Qs. All right, sell off, big 3 weeks into resistance, 2 weeks sell off, big 3 weeks into resistance area. Now, because this little arrow, we didn't push up, that kind of makes me think we chop around, we consolidate. So if we spend 3 weeks going, just kind of bouncing back and forth, setting it up, and then we do get that second rate cut, we're after the election, and then that's what sets up stocks to catapult. That would make a lot of sense to me. So am I coming in here every day trying to just like pound the keys and be involved in every name that looks decent? No. I want to be very, very selective, knowing that we've got a lot of noise right now. It's just like an all-time high amount of noise. I'll get into charts in a minute. I just wanted to get over that. You want to hit some up?
Yeah, I'll go over a couple.
Send it on over.
All right, give me a second. All right. So again, very similar outtake. Again, I know, prior chart talks you mentioned like your target is like 600 in the SPY, and what I try to articulate in this
Months
weekend,
away.
Yeah. It's not like it's gonna happen tomorrow, but my point was like we're both on the bullish side of things, separate from these other things that are going on within the market in the longer term, not like day to day. So for me, to keep it very simple, even for I know you're looking at a lot more of the Qs. I focus more on the S&P. It's like for me, the S&P took out those prior all-time highs, and as long as we're holding about 565, it's like okay, cool. Show goes on. If we get like a little break down below that, could be some time to raise some cash from like an active trading standpoint. So just keep an eye on that, prior breakout level that's turning into support in the short term, seeing how it reacts there. And keep an eye closer on, I'm going to use like the industrials as an example. Just keep it, we're looking at some of these sectors. So I try to have these arrows here to show the number of attempts that these sectors and markets tend to take before they break out. So for the industrials, you can see 1, 2, 3, 4, 5 attempts before they break out. And my point with that is if you look at sectors like the mid caps, we're seeing like they're getting closer to that 5th attempt. We can see, the 4 attempts so far. We can see this tight little flag forming, and potentially maybe that 5th attempt, it pushes it higher. Same thing with the IWM. And Shake, I know we spoke privately. I'm like trying to not use my mouse to like have the, so I'm like taking my hand off the mouse to not have that like crossbar come up.
I,
But
I was giving Bennett some critiques, and when he comes over the chart, he tends to just like kind of
this,
do that the entire
yeah,
time. This is gonna happen, and this.
yeah. I'm like, keep my hand up. But
Yeah, yeah.
so with the industrials, we saw like that fifth attempt, we saw that breakout higher. Mid caps, we saw it's at that fourth attempt, it's a tight little flag kind of forming, and the small caps a little bit kind of behind the game, in third place, so to speak, with like three major attempts, same little tight kind of flag forming, but kind of chopping around, but just waiting for those fourth and fifth major attempts before really expecting breakouts in these spaces, like you said, just kind of reiterating that chop that's going on. Again, in the short term, I'm keeping a close eye on healthcare. Again, it looked very weak coming into the week this week. A little tongue twister there, but we had that shakeout down through support, kind of turned back up. So maybe there is a potential support buyback back up this area. So keeping some eye on the healthcare names, keeping an eye on some of the biotech names. Again, we can see over the mouse, we can see, three major attempts at that breakout level. We can see, this week, maybe a little support buyback through that like 146 area. So again, just keep an eye on some of the healthcare names for some support buybacks. Keep an eye on some of the biotech names. Again, utilities, I feel like no one's really spoken about it, at least, only see in the media, but utilities just, strongest sector out there, and, no one talks about it. Again, very boring sector to trade, but, all year, utilities have just been taking my hand off the mouse again, just rocking a new high. So we're seeing some like broad participation, other than maybe like energy is still in somewhat of a broad breakdown stage, kind of just, you can see the downward trend it's been in. So, kind of avoiding energy in the short term, but a lot of the other sectors we're just seeing, kind of broad participation for the year. And it's hard to expect, the S&P's up, nearly 20% this year. The market's more than likely going to close the year out on a very positive note. So for like the bears, I think we're going to like break back down and be back at 500. I don't see that going into year end, even with, this stuff going on in the political space where it's a strong year. We're probably going to close out that year, very strong. So that's kind of my take on some of these sectors. I'll pass it back to you, Sheikh, if you have any individual ideas or good and bad trades you want to go over, we'll take it from there.
Ooh, all right. So, share it up. Let me new window. Let me see something real quick. Hold on. I lost the data. All right. I want to go over this Viking loss I took. Well, I wasn't a loss. It was a break-even trade for me. It was very, very heavy, but this is what my kind of style of being like offensively defensive. I'll explain. So my style is I want to have as much stock as I can get really, with a stop that makes sense, that puts me in a position to make major money. So this Viking Therapeutics, we know it's got this huge level here at 70. If it can break that, it's these biotechs are so crazy. It kind of coincided with this move out of biotechs, so it got taken down. So I gave back a decent winner, but I didn't lose money, but I put myself in a position to make huge money, and I want to go over the trade here. So here's what I'm looking at for an entry. All right, get the moving averages back up. All right, so every time this thing has attempted 70, it's kind of been wide and loose.
Mm-hmm.
And it just kind of run up to level, sold off, run up to level, sold off. This time it runs up to level, gives a tight little cute consolidation here. So I'm looking at this for an entry right here. All right, we see that little inside day, below high is 66. All right, so here was the trade for me. All right, we see this 66. Now this is like my top. I would bring it up on eSignal, but they flagged me and won't let me show it up on these chart talks for whatever reason. So we're gonna have to deal with the TradingView annoyingness, but bear with me a second. We can learn something. All right, so I had this little trend line drawn, it gapped up above it, and it came down, retested some prior levels from the other day, and then it came up, made a new high. So I love, this is my favorite kind of entry. When I'm looking to enter something, it dips in the beginning of the day and I can buy through that intraday high when it's a very small amount of its true trading range. This is a name that moves $4 or $5 a day, and this low to high was about $1. So this to me, this is like a great entry location because again, we got that intraday entry. And then remember what I was saying on the daily chart. It coincides with this, inside day and up right here.
Mhm.
Okay. So we're going back to the 15-minute. All right. So here was the first entry. So I'm buying through this high. I'm buying, was that it? It was 66, 67. Okay, we'll say 6667 versus 65. All right. So I buy 5,000 shares up here through here. Boom. Stop lower day. Okay. So dollar 40 risk, right? Around 7K-ish. All right. And then the rest of the day, it just absolutely flags. Like perfect flag. 750, right below that kind of 70-ish level.
Mhm.
And then the next day we get this breakout move, right? And now a lot of people want to chase the breakout move, but this name is so hard to trade. Like it's just you got to be in it if you want to, participate in the gains.
Mhm.
So we get that breakout move to 72. Now I could. Oh, and I added. So when it has this move all day, I added another 1,500 shares here through this, just because it's perfect. And I'm just giving to this, this little flag. I'm giving it about $1. So I have this 7K, this 1,500. It's about $8,500 risk. I have 6,500 shares in a name, 7,500 shares I got up to in a name that moves, dollars. So it makes that initial breakout move. I'm sorry, we're going back to the daily here, but it makes this breakout move and it stops at 72.36. And this is a Friday and it has super high volume. It was triple witching day and it looked like it was going to go and it always gets stopped back. So I'm thinking in my mind, maybe because of the triple witching, they'll pin it to 70, 71 and close right around that 70, crush all the options buyers. We've seen that happen before. So I don't take profit because also if this does want to let loose, I'm looking at 82, 90, 100 with all that size. That's an amount that seriously moves my account. All right, but remember, offensively defensive. Okay. So biotechs end up getting smoked. Now remember my price, I buy here, my original stop is down here and down here. Okay. Biotechs get smoked, give back. I end up getting out instead at this 67. So it sucks to have so much open P&L and give it back. But it's such a great loser because I put myself in a position to make, honestly, this breaks out, I probably make 80, 100 grand in the name. If it goes to 80, 82, 85, which is not out of the realm of, what this name does when it does break out. I was wrong in the trade. I lost $0, but you can see that,
Order partially filled.
fuck.
Order filled.
Fuck.
Getting stopped out of something.
Yeah, I got stopped out. Offensively defensive. I'll go over that Aspen trade for you. So I put myself in a position to make huge amounts of money. I ended up giving back like 25, 30K of P&L. You look at the trade, be like, well, you're risking this and make this. My target was so much higher for the name. And like, I know how this name trades that if it really wants to break out, that taking profit at 72 would have been I would have really regret that in the future.
Mhm.
Just having that kind of, mentality of not letting things go. I'm really trying to hold on to winners type thing.
Mhm.
But you can see that because I was so fine tuned on the entry and noticed the aspects of the technical analysis, like this is the first time it's tightening up near that 70 level. So, that tells me I should put on some risk. And then, it came all the way back. I got out and it sucks, but it sucks like looking at the P&L all the way up, all the way down like that. But I didn't get hurt in the name, and I put myself in a huge position to make money. And I think if you're sitting in front of the screens and you're really trying to improve your game and improve your sizing and things like that, it's the little things like that really, because it wasn't a loser for me. Yeah, I had a lot of open P&L I gave back, and it sucks that happened. But at the end of the day, I put myself in 10, 100 of those situations. It's going to very, very much work out for me to the upside. This Aspen, motherfucker. I was trying to get in this one today. So Aspen has this nice little level. On the newsletter, I was talking about its growth. It's supposed to grow 130% this year and it's supposed to grow 155% next year. So we like that accelerating growth where 130% growth is great. Bam, we're beating that this year with 155% growth. That's very impressive. We call it accelerating growth. Love that. So this triggers early in the morning. It opens down. I buy through the highs. This 28.55. You look on the daily, the 28.55 area was these highs right here.
Mhm.
So it was yesterday's high and these highs. So I thought that was a good area to buy through. It absolutely exploded with volume. Look good all day. So I'm like, maybe I want some more of this thing. It pulls back to kind of the buying area, that 29. I load the boat here and then, give it a chance to go. And then I just get out of these ads right here. So, same thing, offensively defensive, where it's like, all right, I see that this name is ripping. I see that it has huge volume coming out of consolidation. It's a huge growth name with huge fundamental expectations that we love being on the same side of, right? Comes into the buying area. I go from like 2,000 to like 7,000 shares of stock while I'm not chasing, I'm not ruining my price. I'm being very patient. I know my price points. I'm giving it a chance to go. And the market's a little choppy right now. So I got out of like 4,000 or 5,000 of those, break even right there. Whatever. I put myself in a place to make money. I didn't lose money when it came back at me, and I'm still in the trade if it wants to work out. So had some nice little high hopes of that thing, but did not close well. But overall, that's kind of the mentality I'm taking. I want to focus on things that I deem are the best names, best setups right now. Don't want to be involved in 100 stocks. Think they're going to make it very, very difficult. But yeah, just being offensively defensive, putting yourself in position to make money. Nothing you can do besides that. And manage risk. Manage the fuck out of risk. That's it. Yeah. Anything you want to add?
Let me see. Let me see. I got a couple charts we can go over really quick.
Oh, I could go over that Roblox too. If anyone wants to go on that, a few tears in the chat.
A lot of what in the chat?
Few tears.
Oh,
Few
tears.
tears in the chat because the trade didn't work out.
So let me go over a couple.
30-year-old men 30-year-old grown men, they press a buy button and it doesn't work for them. So they complain.
All right, let's see. So we got, again, I feel like I haven't traded Apple in quite some time, but we do have this breakout forming, blue sky-ish. Again, did push this to 34 area, but we can see it's been setting up, getting a little tighter here. So keep it on Apple. Doesn't have earnings until end of October. So maybe we get a little, pre-earnings run to new highs. Let's say MTD went, O'Reilly went. TMO, again, this name is definitely frustrating me quite a bit. Like you said, kind of protecting the capital or being offensively defensive. I had a trade in this TMO back in the end of September through the 620, and I just took it off break even, the 2 days later. Again, if I'm expecting a breakout and it's coming back below my price, probably wrong. So was break even on that one. The somewhat frustrating one was we've all taken trades where you take it the first time and it doesn't work. And then the second subsequent attempt, you forget about it and then it goes. So I told myself if I got out break even, I'd have to be willing to go back in the same again the next time. So I did get back in, but this was the very frustrating stop. I wanted to give it the right room. I didn't want to tick myself out. Gave it versus 600, pushes me out and right back to the 620. So a little annoying, but again, I wasn't chasing it this time, ripped right back up. I wasn't doing that same trade again. Now it's waiting to see if it can consolidate and get tighten up in this range. It's in this 20-point range relative to the name. Again, we've seen this name run, nearly 100 points when it wakes up. But I want to see if I can find where I can risk, 10 points in the name for that, next attempt through that 620. So keeping a close eye on that one. Again, this JNPR, this candle this little wick here is not a real.
I used to trade that back in the trading fund days.
Yeah. It's just funny, recently, it's just the name just doesn't move intraday. It's just, she's for a tech name, it's just interesting to see how tight some of these days are. But we were talking about this last week in the chat. Again, this JNPR has not traded above, let me change this to a monthly, has not traded above 40, since, Y2K basically. So, forget this going back to 200, but I'm focusing more on just this 40 area, talking about a 20-year base. So it's been setting up for quite some time. Keep an eye on.
Wait. People try to compare what we got going on in tech to Y2K. Look at that. That's hilarious. Just look at your chart right there.
Mm-hmm.
That's what we need. I wish we had a little Y2K action.
Yeah.
Damn.
Yeah, I'm not expecting Juniper to go from 40 back to 200. You know, for this name, you know, realistically, maybe it gets him to 60. You know, maybe and he, like, again, it's been set for 20 years. It's not like this is going to go tomorrow and be at 80. You know, next week. So that's where, you
But
know,
if you type up the MU long-term chart, it did that move. It was the 18-year breakout or some shit like that.
let me see.
See that?
So the only thing, the difference I would say between the two, the duration 100% with the only difference in why I don't like Juniper as much as MU is this was a breakout through all-time highs, where that Juniper is like breaking out still in like a massive base, where this is like through, you know, there's less overhead resistance in that MU breakout, where Juniper kind of has a lot more price levels to battle with once it gets above 40. That's why I don't think, like, I think if it breaks 40, you know, 60, 70 is probably, you know, some type of move it can have in a year or so. But I don't expect this to have, you know, 120, 160, just because it's still bottom right for so long, where MU in that same duration or similar duration was at 52-week high. So again, just keep an eye on it for that 40 breakout. A couple of names we got. Let me get out of this monthly chart. We got this QCOM.
You keep going.
This QCOM, there's 176 setting up. We got this Goldman setting up for blue sky breakout through this 513. Again, the financial names have been pretty strong lately. The financial sector as a whole, pretty strong. So keep an eye on that. And now, Shake, you're back.
Back, baby. Just had a little coffee.
Yeah, it's all good. It's all good. Let me see any other ones we got. Again, we got this Shake Shack, 110 breakout, setting up nicely. Earnings not until end of October. So it's pulling up in this range. Again, we saw it shook out this low back before it boarded last quarter. And we've just starting to see, you know, buyers stepping up. We see this pivot low, higher pivot low here, higher pivot low. If we could see another higher pivot low, and Shake Shack continuing to tighten up, you know, much more likelihood of that breakout.
Compression leads to expansion.
There we go. So, and we've seen, again, like I was trying to show in those sector examples with Shack, you could see 5 attempts at this 110. Each subsequent attempt, more likely that pressure should push in the direction it's trying to fight for. So, you know, keeping a close on a couple names, nothing too crazy. But yeah, that's really it on my end.
Send it back so I can go over this Roblox.
Yeah.
Send it back. I just sold more of that Aspen Perlos. All right, let's go over this Roblox. The fucking the Trail of Tears, the Oregon Trail of Tears, man. All right, so Roblox, this is a phenomenal setup to me. There's an A+ setup. They don't all work. You know, like you said, when these bases were breaking through all-time highs versus at lows, you know, much better. But still, it's a very, very, very good A+ to me, stage 1 base. Roblox was a name we had a ton of success with 2020, 2021 when they were ripping all those tech names. And it was looking like it was going to set up really well. So here's the broad setup. All right, we see this on a macro. Huge base been forming over 2 years. All right, and then since here were earnings, and they got bought up through the earnings, and we're just kind of setting up, kind of going after this level. All right. So the original buy, I kind of messed up the original buy. I had it through 45. I was still much more worried about the market selling off. And it kind of held up well through it. I sold it just kind of being a little too offensively defensive and messed up the trade. So I was like, all right, if this gives me another opportunity, I want to absolutely load it. So I notice after a few days, it makes a run to 47.50. 47.50 are exactly these highs. But the real level's around 48. It's kind of a messy level, right? If it breaks that 48, I'm thinking it's pretty much go time. Maybe we'll see an influx of volume falling. What I wanted to see was something like this SE. Okay, this SE has a huge base. You see the similarities in the chart there?
Mm-hmm.
All right, so huge base. And then out of nowhere, once it breaks the base, it picks up momentum to the upside. You don't really see this on the daily chart if you're not paying attention to that base weekly level. So if you're buying it, you know, I was looking to buy it in here, and then this came on the Fed day, and I wasn't ready to buy it yet. Wednesday, September 18th. That was when they cut and it triggered early in the day. So I was like, all right, I'm not buying this on a Fed day, you know, a few hours for the Fed. But that was it. That was the only chance it gave you, that it gapped up, pulled back in, and just started to run. So I was hoping with this Roblox, if it, got above this level, that's where we would see the momentum kick in. All right. So I've been hawking this thing. It makes the run to 47.50. I'm like, I stared at this thing every day. And what I loved, and we were looking at this 45 level. Resistance turns to support. So it has this little shakeout day, doesn't take out 45. And I was looking at it the next day. I was like, this might finally give that entry. Like, this might be a really, really great entry. So it's an A+ setup. God, look at this Aspen now. You don't see how I traded it? I marketed out of another 2,000 shares right there. It stopped out the rest 500 too. All right. So this Roblox. Remember I was talking about the daily. So this day, so it comes down this day. Right? This day is this day right here, where it's kind of selling off, but to me it's just kind of setting up. And then the beginning of the next day, it just comes in with all this volume. So I start buying it here, and then when it breaks above, I load it. To me, this is A+ setup. I ended up buying like 15,000 shares, all against this 45. Now it looks like I kicked. This is a great looking kick. This was 500 shares, and when you got 15,000, it's not that much. So I got a little bit off, but it was nothing like I'm really, really booking. I just had so much I was a little uncomfortable. I'd sell something to the pop. So then the next day we have this like hellish day where it sells off like crazy. I think I was buying more down here. That's not good. Nothing good about these buys down here. But regardless, it's the same thing. It's like we got to put ourselves in positions to make money. Where the probabilities on your side. If I had done this in SE, I'm rich. But I did it in a name like Roblox where it didn't work out. Very similar setups. So I got long for this, gave it to the 45, and just kind of took the pain that day. And I was up a lot P&L wise and gave it back. And it sucks. That's part of the game. Right? There's no way to catch these huge winners without being involved in some of the these volatile names.
Mm-hmm.
So saw a lot of tears about that one. Trust me, it hurt me more than it hurt you. But just in summation, it's like I look back on the trade over the weekend. It's like, yeah, it sucks it didn't work out. But again, if I do that 100 times, I'm gonna make money. I'm gonna make some big money, as I have. So every trade, even though it looks good or whatever it is, it doesn't mean it's automatically gonna work out. There's no guarantees in this business. So all we can do is kind of just keep trading. Just keep trading through. That's it. And keep putting yourself and making adjustments, going over your trades, and being obsessed with your executions and how you can make them better. It's really what I've seen, where the most improvements come. But 22 minutes left. Let's see this market close. Let's wrap up this little chart talk. Any final thoughts?
That's it, man. I think you wrapped it up.
All right. Like, comment, subscribe, all that good stuff. And we'll see you guys next week. If you think you're going to get rich overnight trading, we're not for you. If you don't want to read daily or weekly to improve upon yourself, we're not for you. If you're not interested in saving weekly and building your accounts for the long term, we're not for you. If you're not looking to improve yourself daily, we're not for you. If you do want to build wealth for the long term, read weekly, save weekly, do all the right things for the long game, then we might be for you.